Good morning, investors and traders. In today's segment, we'll be talking about gold prices and how low will they go. Because yesterday we did see the gold prices dropping below the critical level of 1800, and now investors are worried, or they're wondering, shall we say, where is the bottom in terms of the prices. Bit about myself. My name is Naeem Aslam. I work as a chief analyst for AvaTrade. My wealth of experience spans over 15 years. During this time period, I worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. Now, let's begin the conversation by looking at the daily chart for gold prices. As you can see from the chart, for the last number of days, gold prices have been extremely oversold. The first oversold signal came over here, and from there onwards we saw this sell-off, which became even more intense in the past few days. Now what we see in terms of the price action is the price has clearly pierced the lower line of the Bollinger Band, and it is well below its 20-day simple moving average. Generally speaking, whenever the price pierces the lower line of the Bollinger Band, like it did over here or like it did over here, it usually moves back or snaps back towards its 20-day simple moving average, like it did over here. And now traders are expecting the prices to return to that 1796 sort of a price level in the coming days. This is the price action that traders are more concerned about, or they are more looking at. If we look at the RSI, currently it is trading below that critical level of 30, and this increases the odd for this particular trade to work in your favor. Now remember, when the odds are working in your favor, this is an opportunity to place a bigger size bet. Generally speaking, that is the concept among traders. When the odds are not in their favor, they would usually place the bet, but they will have a smaller size of that particular bet. But under the current circumstances, it is clear that the odds are very much in line with this particular trade, meaning the odds are much more stronger, much more better, as the price has pierced the Bollinger Band. The RSI is also well oversold, and the price is trading well below the 20-day simple moving average. The risk to reward ratio certainly makes sense for a trader who wants to get involved in this particular trade. What they could do really is place a stop loss below the yesterday's low and then have a target in around that 1796. In addition to that, the price continues to trade below the 50, 100 right over here, and the 200 and 100 is simple moving average. But overall, the sentiment for gold prices has changed, or it has reversed its direction, because the 50-day simple moving average has crossed below the 200-day simple moving average, and the 50-day simple moving average also crossed below the 100-day simple moving average, confirming that this particular price action is likely to continue its journey to the downside. Now the question really is, how low will the price go from here? If that is the question, then we are looking at, first of all, our potential resistance level right over here. So we're going to mark it our first potential resistance here. Our potential support zone is going to be 1673, running all the way to here in around that 1693. And then after that, if this one doesn't hold, then the next support zone is going to be in around this particular price level right over here, that 1640 sort of price level, running all the way to 1654. So 1673 to 1693, your first support. The second support is 1640 to 1654. And in terms of your resistance, your first resistance is at 1876, running all the way to 1860. After that, 1815 to 1805. That's all for now. See you guys next time.